So welcome to the Data Explorers Market Update with me, Will Duff Gordon. So I was on Bloomberg TV first thing this morning, and it was all about Ireland and the possible bailout there. And I've basically gone cross-eyed for the rest of the day, looking for similar trends as what we saw investors doing in regards to Irish banking instruments, looking for that similar trend to see if Ireland are on their own. Are there not other sort of mid-sized European banks also subject to sort of negative investor sentiment, to try and find out who could be the next Allied Irish Bank, the next sort of copycat scenario. And I found this actually in spades in from sort of September onwards, often in late October. We see a combination of things which show that investors are negative towards the mid-sized Italian and Portuguese banks. So what we've found is recent and rising short selling in the common equity, declining institutional ownership of that equity, but as importantly, and almost reinforcing the message, we're also seeing the bondholders who are long these corporate bonds of these mid-tier banks in Portugal and Spain, desperately selling, or not desperately as being dramatic, but reducing their holdings, getting out in October, September, and sometimes in November, whilst also people are borrowing more and more of these bonds, potentially to hedge CDS. So, which ones are we talking about? So, Banco Monte dei Paschi di Siena, romantically named, and it's disappointing that it's come on our list, but stock on loan is at 3% of the ordinary share, which is a 3-month high. And there's also this pattern of bondholders getting out and people borrowing the bonds in the April 2014 and the October 2012 corporate bonds of that Italian bank. The other one featuring is a UBI Banca, 1.8% of the ordinary short, which is a 3-month high. And then there's activity in lots of its bonds, DEC 2019, November 2012, Feb 2011, where a marked trend at the same time of funds who lend selling their bonds and people actually, the demand to borrow rising. And that is what we saw in Allied Irish Bank at about the same time. If we then look over to Portugal, Portugal's often mentioned as being, the next Ireland. Well, people think that it could have been before Ireland because people have been are massively short selling, BCP, Banco Comercial Portugues, which is basically pretty much all the common equity you can short. There's also negative sentiment in their January 2012 corporate bond. Let's look at another one, Banco Espirito Santo, 1% to 2%, so short selling in the equity has doubled recently, and there's sort of investors basically avoiding and getting out of their bonds January 2012, February 2013 and February 2015, and there's a bit of a spike in borrowing in those bonds too. Finally, Banco BPI SPA, another sort of mid-tier, probably not so much mid-tier, large Portuguese bank in relative terms. Big spike in November alone. The stock on loan has doubled from, not doubled, but it's gone from 1.4 to 2.4% of the company's ordinary shares in about a week, which is pretty marked movement. In what's happening in their corporate bonds, well, there's negative sentiment in the July 2012 and the September 2015. So this is all written out in my report today. But the bottom line is Ireland are very much not alone. This could be happening to any one of these countries with the similar problems. If you'd like to read the report, it is at dataexplorers.com/news.